Yes, hello guys. Welcome to the second video of fourth section of technicals. So today we're going to be looking at the taking profits and how we set them, what we can do about it, going break even as well. And when linking this to your risk management plan as well, taking profits uh, is just as important because you need to understand when you need to get out the market. And a lot of this is done with what we've already learned. So understanding where there are potential areas of reversal. Are you going counter trend? Are you going counter fundamentals? That's all the sort of stuff we're going to be getting into right now. So things to take into consideration when taking profits. Timing of day, if you're trading intraday, that is. So if you've entered, for example, in London session and your trade is going well and everything, and you're approaching a point of interest for potential reversal at the end of the day, and also you know that London session is over around 4 o'clock, and then the rest of New York is still going on. If you know the end of the day is coming, consider taking profits, or at least a good amount as well. So are we about to hit a potential area of reversal? Do not be greedy, take partials. This is one lesson you have to learn for funded accounts, especially. Um, I remember once when I just kept on being too greedy and everything, hoping for higher profits, and it'd come back to break even, for example. So nothing would happen. And then do the fundamentals support this directional bias? So yeah. So when to go break even? Looking to go break even by setting your stop loss to entry point plus about a pip to cover those spreads. It's essential in keeping a profitable account. However, the key point is in knowing when to go break even. Too early, you can get stopped out and price goes your way. Too late, you risk price hitting stop loss as it is then reversed. So the example over here is when we're doing a confirmation trade, we've got that significant break of structure, entry down there. So entry down here, stop loss just below that. And personally, I would keep this going until we see a significant structure break. So that would be that one right there. Now, from there, we can expect that there would be some kind of retracement or even an inducement. So that's the reason why once we see that, that's when we go to break even. Because if you do see an inducement, it could either be an inducement or reversal or complete reversal. Now, taking profits on the higher time frame. So on the higher time frame, we've got this example right here. Point of interest for the sells. Your TP1 would just be at that first low before you reach that area. TP2 below the liquidity where it fills the void as well. And then TP3, this would have to depend on fundamentals. I'll just refer back to my case study on my Instagram page, the EuroCAD trade that I held for a few months. I could have considered taking profits at one of the areas where there was clear equal lows. So we had substantial liquidity at the bottom. But I understood that fundamentals were still leading in the downward direction. I knew that Euro kept on selling and CAD was going to increase in price. So what would that mean? EuroCAD keeps on selling. So I kept on holding and holding and holding. And I only took about maybe 10%, 20% in my first take profit or something like that. A lot of it was still held because I knew I had that fundamental backing. And this is the key thing that you're going to learn in the next part of the course as well. Lower time frame, same scenario again. You get to that lower time frame point of interest. You see a London reversal, for example. So we've got the day model that we look at. You've got the Asian range, London reversal into maybe a 15-minute point of interest, a 1 hour point of interest. Get that rejection straight off above the high. So both sides have taken liquidity. You retrace back down. London entry around 8 o'clock to 10 o'clock, go all the way up. And then this is where you start to see New York retracements. Now, this could be a New York continuation, or it could be a New York retracement back up. But the thing is, you need to understand on the lower time frames, you need to be very versatile because price can change at any point. Understanding the amount of volume in this point of interest as well is very important. So TP1 just above the range right here, potentially even Asian range, but I feel like is too close of an area. TP2, fill in the void, most importantly. So it could be just there and at the first order block. So I would say just about here is a comfortable region. And then TP3, hold until wherever you're comfortable. Obviously, go and break even. It's the same plan as what I just listed here. You need to go break even when you see that first structural break. Okay. And take in partial structure. So this all depends on your situation and your conviction of how likely prices to continue in your intended direction. Personally, if I'm trading intraday, I take out about 80% by my second TP because I understand the timing of the day. This is if I really am trading intraday. But if it's a high time frame zone and I expect it to go for a long time, then I will take less profits because I know I can hold on for longer. If I'm trading on the high time frame, as I just said, this example again, the Eurocad case study on Instagram, have a look at it as well. I think in the second post there, I talk through my TP areas. So we had this massive sort of boost down all the way to the bottom, started bottoming out. And then as soon as we started seeing break of structures to the upside, it reacted off a key zone, institutional area as well. The key figure number, I think it was, like a 0.8 or 0.6. It was one of them numbers. Started breaking up. Then that's when I understood, okay, I need to start taking profits. When I started seeing more upward direction, I would take profits. And so, yeah, that was a perfect trade. Held for quite a while and did really, really well. But anyways, guys, I hope you took notes for this one. Obviously, this one is more explaining what I do as well, but it's really effective. For you, you're gonna have to see, depends on the timing of your trades, how long you do them for, and how often you can trade. So just weigh things up and see how your strategy goes as well. Obviously, ask questions all the time. Speak to the other traders in the group as well. See where they're taking profits if you're in the same trades. But yeah, anyways, guys, speak soon and see you in the next video.